Welcome once again to Buying Your First Home. For all you first time home buyers, this is your place to go on Tuesday evenings, every other Tuesday, right here with myself and with Ashley, and bring her on here to say hi. Ashley Westbrook, everybody, your realtor. Are you on, Ashley?
Hi there.
There you go.
I am your local realtor. I am 15 years in the business. You do not want to partner with anybody but the best. I'm telling you, I am in the game plan business. We know how to make things happen and we look out for you fiduciarily. And so, my buddy on the other line is Bruce, and he knows how to make things happen too.
I'll tell you what, and especially right now in this market that we're in, we have got to remain on top of the game. And listen, you've come to the right place. If you have any questions, of course, we'll give you an opportunity at the end to ask your questions. You can type into the chat if you have any questions, and we've had people monitoring our chat so we can answer your questions there. And let me see, I thought we had I want to check this ticker. I don't see it going yet. There we go. Let's show them all. Oh, well, I guess we can only do, I thought I have to go edit and make them all. So I'm learning it as we go. So I'll just remind me to go click every now and then. Right there you can see follow Ashley on Facebook. There's her information. But listen, this is where you want to go to get your questions answered, especially in this market. You're going to have really qualified people help you with the purchasing process. On my end, for the qualifying you part, to find out how much you can afford, get your income qualified, etc. And on Ashley's end, she knows what you need to offer for these homes. She's on top of the market, staying in tune with it every day. So listen, it's really, really important that you check in. And again, we're going to give you our information and you can ask questions. So right now, let's go ahead and get started. Diving into buying your first home, how to get a mortgage, and how to understand the home buying process. Now, I noticed that we're not on this screen here. I don't really care. You don't need to see us, right? You just need to see our text. So anyway, here we go. Let's get started, and we'll, like I said, dive in, start answering any questions you guys may have. So what are we going to talk about? We're going to talk about our goals are learning the advantages of owning a home. We're explore your different programs. We're going to talk about credit and how it affects your purchase options. And we're going to show you how to complete the pre-approval process. And of course, we're going to answer any questions that you may have. All right, so first of all, so why buy instead of rent? I don't think I really need to answer that question, do I? I mean, if you're here, you are probably renting and rent is going up, up, up. It's ridiculous. I've seen some people say, man, my rent went up $400, $600, $1,000 because there's no properties right now. So it's scarce. So what happens? They start raising the rent. So if you've been thinking it was less expensive for you to rent, listen, it's not anymore. And listen, here's what I'm talking about. Owning a home can be a wise investment for you because that is going to only increase in value. And you can build, you're going to build what's called equity over time. So when you buy the home at one price, in 5 years, that home's going to be worth a lot more money and you will be paying that down. So that difference there in between what remains on that home loan and what the home is worth, that's called your equity. And that is money you get to pull out either in a cash out refinance or you pull it out and use that money as a down payment for your next home. And another advantage is your interest. The interest paid on a mortgage is typically tax deductible. You're not writing anything off on your rent. Now you want to talk to your CPA about that. You know, and Also, look, you can make changes to your apartment, your townhome, but on your own home, you get to really personalize it and make it your own. If you are thinking about having kids, maybe you just have a child or you're planning for a family, you're going to need to make room for that, right? So you need a larger place. And a starter home is a great way to start building your personal wealth. And then stop paying you're paying to make someone else wealthy right now, right? You're paying a landlord instead of yourself. Every time you make a payment, it goes, part of it pays down the principal and part of it is your equity. So you're building wealth for yourself. So this is how you begin. And this is why you're here. You want to get started, right? So it's really simple. You want to find your team of experts. So right here, we're introducing ourselves to you. We want to be your experts. We want to answer your questions and help you. If you're purchasing in Texas, we can certainly help you. If you're purchasing outside of Texas, we can help you there as well. So reach out to us and we'll help you get started. Now, the second thing you want to do after you have that team of experts is complete the mortgage application. And with that mortgage application, we'll get you your pre-approval. So you submit the application, I'll collect all the necessary documents that we'll need, your maybe your tax returns, but definitely your pay stubs, your W-2s or your 1099s, bank statements, things like that, so we can know how much you can afford and we can start exploring your loan options. And then you're going to speak with your real estate agent to talk about what's available in the market that fits your criteria, that fits your purchase price. What area do you want to live in? What style of home are you looking for? A condo, a townhome, single family home? And how soon can you start looking? Now let's get into the basics of your home. By the way, I want to point out here, if you guys see these little the QR codes there, that will take you directly to our website. If you have any questions, you want to go there. If you're driving, please don't try to do that right now. So come back to it later. This will be recorded. One moment, please. This will be recorded, so you can come back and get this later, take you straight to our website. All right, let's get down to the basics. So these are the factors of your pre-approval. Here's what the lenders look at and what goes into the pre-approval. Your credit history, your employee status. Are you working? Are you self-employed? And your qualifying income. That's why we need your pay stubs. Your existing debts. We're going to see that when we pull your credit, and your down payment. Let's go into a little bit more of that. So the importance of your credit history here, if you see, what determines your credit score? People want to know that. It's a very confusing thing. I'm the first one to admit it. And listen, it can be very challenging on the front end for some of you. If you look at this in the green, you'll see the new credit or types of credit counts for 20% towards your score. The length of your credit history, about 15%. The amounts owed, 30%. And your payment history, look at that, 35%. So those last two there in the blue, 65% of that has to do with how much debt you have and what your payment history is like. Do you make those payments on time or not? So that's a huge factor. And please, whatever you do, stay on time. Do not have late payments. Do everything you can. So they're looking at a history of making these payments on time because it indicates that you're likely to make your mortgage payment on time, right? So that shows that you're credit worthy. It also, your credit score it plays a huge role in the type of loan you'll qualify for. And we'll talk about that a bit later. You hear about conventional loan and FHA loan. Your credit score is going to play a big role in which type of loan you'll be able to qualify for. And it also can determine how much is required for your down payment, the amount of how much you can borrow, and the interest rate. That interest rate you're going to get is weighed heavily on what your credit score is. Also, if you're looking for down payment assistance, which we'll talk about, you have to have a certain credit score. In most cases, it's 620 or 640. And we look at those and we try to, whenever possible, especially first-time home buyers, see if we can get you into one of those programs to save you thousands of dollars down payment assistance. So how much do you need for down payment? We hear this a lot, right? everybody, not every, a lot of people think they've always heard the number 20%. Guess what? You don't need 20% for your down payment. That's great news, because a lot of us, especially in this economy, we don't have thousands of dollars saved up. We're ready to go put down as a down payment. Many of us struggle with the 1,500 or 2,000 down payment for your next apartment. So on those down payments that you're putting, the deposit you're making on an apartment, you know, in some of these cases where I'm talking about down payment assistance, sometimes you can get into a new home for as little as that deposit for an apartment, believe it or not. And I can walk you through the steps of how to do that. Now, like I'm saying, you might be able to buy with very little or no down payment. If you use a down payment assistance, you need 3% for conventional, 3.5% for FHA. Those are the typical programs. If you're eligible for down payment assistance, we'll look at that. It has to do with county, the county you're purchasing in. It has to do with, like we said, your credit score, the purchase price of the home, and you can't make over a certain amount of income, but those income amounts are higher than what you might think. So even though you're not bringing 20%, you need to be prepared for closing costs that are not your down payment, okay? Those are things like your title, your home inspection, the appraisal, attorney, and recording fees. So that can add greatly. That can add as much as 2, 3, and 4%. So if you're counting on 3% down, all of a sudden you're looking at 5 or 6%. So you have to factor that in. And that's part of what my job is, to go over all that with you and show you exactly what the cost is going to be. So you need to be clear with us and let us know how much you'd like to put down, what the purchase price you want. And really, we talk kind of backwards, what you can afford, and then we work backwards from there, and we'll tell you what price home you can go out and start shopping for. Check in here with Ashley real quick. Ashley, how we doing on time? We doing okay? I've got, hey, we're 12 minutes in. I guess we're doing good. You're live. You're on. You're live.
No, we're doing, yeah, we're doing great. And I wanted to just reiterate this moment in the game. And it's actually, it's not even this moment. I mean, here's the thing. It is so important for a lender and a realtor to be on the same page. And that's the great thing I can bring to you as a team, and as helping you get, you know, really insane. Because at this point in the game, there's just a lot of things that we haven't educated yet, but we're happy to take that 30-minute call that we've got offered to you on a Calendly link goes on. If you want to book something with Bruce and I to further investigate in home ownership, we're happy to do that. But we just want to reiterate, like, you know, Bruce and I are each other like maybe 2.5 times a week. Wouldn't you agree, Bruce, when we're talking about a contract or working a deal?
Absolutely. We want to find out. We want to be the team, and we want to hear from you guys. Hey, she'll call me, Bruce, I have this great buyer. They're so excited. They just moved to the area. They're looking in Plano, Frisco, wherever they're looking. And I need you to get them pre-qualified, because you can't go look for a home. She's not going to take it and show you homes until you have that pre-qualification letter, because what's the point, right? If you don't qualify, the home seller is going to be disappointed. You're going to be disappointed. You fall in love with a home, find out you can't afford it. So we are going to get you pre-qualified before we send you out and start looking for a home. Excuse me, I'm taking a little drink. I've been fighting a little cough here, so hopefully I won't lose it here. Let's talk about how much you can afford. So that's where after I get all of your documentation, I pull your credit, I look at that credit history, and I determine your debt to income ratio. That's going to tell us the loan amount you're qualified for. So it's typically the anticipated total housing payments plus your existing debt payments divided by your gross income. Don't worry about all that. If you don't like to do math, we'll figure that out for you. We just need a few documents so we can get that figured out for you. And certain loan programs will offer different qualifying guidelines for an expanded debt to income ratios, lower down payments, and loan amounts. Now, that's typically, it's typically 45% ratio for conventional. You can go 55% and higher on an FHA loan. Now, there are other factors that play into that, and some of those factors have to do not only the credit score, but your payment history, all of those things we're talking about that go into what gives you that total credit score, all of that plays a role. So you want to get it pre-approved so you can find out what you can afford before you get out there and begin shopping. And so let's talk about what goes into your mortgage payment. All right, because to understand how much you can afford, you want to know what you're paying for, right? So the principal. The principal is the amount you're paying on the borrowed money. So if you're borrowed $300,000, you're paying down that $300,000. Interest, that is your interest rate, and you're paying that percentage. Let's say the interest rate is 5%. You are paying 5% interest monthly to the lender for the privilege of using that money, right? And then you've got your property taxes. Property taxes typically are going to include your county tax, also your city tax, and maybe school taxes. And that's based on the county where you're purchasing. We can usually look that up and see how much that home someone was paying previously on it. And I have a good chart that will show me every county. But you can estimate typically around 2.3% property taxes on your purchase price. And then you have homeowners insurance. So homeowners insurance is going to cover anything that could happen to the home, fire damage, any sort of disasters and things like that. So those are the four things that make up your payment. PITI, principal, insurance, principal, interest, taxes, and insurance. Now let's dive a little bit deeper into this. Which loan type is right for you? So you've got conventional and unconventional or non-conventional. Let's dive in and talk about the difference. Basically, conventional loan, in a nutshell, it's not insured by the government. It's not a government loan. Those are the loans that are backed by Fannie Mae or Freddie Mac. You hear about Fannie Mae and Freddie Mac, see right here. And you have a lower debt to income ratio threshold, as I mentioned before, 45%. This is typically for borrowers with better, higher credit scores, 680 and above, preferably 700 and above. You're going to get the best pricing there on conventional. Now, lower credit scores can impact the interest rates more significantly than it will on the FHA loans and on the government loans. And when you don't put 20% down, and this is why people think you need to pay 20% down, because whenever you don't pay 20%, you're going to have to pay mortgage insurance. Now, mortgage insurance could be more expensive with lower credit scores. Another reason you want to make payments on time and keep that score good, keep that score up. Let's see. So now the conforming loan limit is currently $647,200. That's for a conventional loan. That means you can purchase up to $647,200 before that becomes a jumbo loan. Now, I know we're talking to mostly first-time home buyers, or maybe it's your first time back into the market. You might not be looking for a home in that price range. But if you are, just know that for a traditional conventional loan, $647,200 is the conforming loan limit. Now, anything above that is going to get you to a jumbo loan. We're talking about here fixed rates or adjustable rates. Adjustable rates are making a huge comeback as we see mortgage rates go up. You should not fear an adjustable rate. They're called an ARM. You'll hear people talk, oh, I got an ARM on my loan. Well, what does that mean? Adjustable rate mortgage. All that means is you're going to get a lower interest rate on the beginning of your loan for 5 years, 7 years, or 10 years, which makes the home more affordable for you, right? So if it cuts your rate down, that lowers your payment. That may allow you to purchase a home at a higher price, a higher purchase price than you could on a fixed rate. And listen, most people, when they buy a home, and statistics will show you that most people are in their home 5 to 7 years, especially first-time home buyers. You may buy a home, it's a starter home, and then you maybe have a child and you got more money on your job, maybe it's a new job, and now you're ready to move on to a second home, a larger home. But if you have a 5 or 7 or 10-year adjustable rate mortgage, you don't have to worry about that adjustment, right? Because you're probably going to be out of that home before it adjusts. Secondly, it's really not going to adjust a lot. And if rates drop, it can go down. So please don't be all that concerned about the adjustable rate mortgage. And we can talk more in depth about that if you have any questions. So the unconventional loans, these are the loans that are insured by the government. These are your FHA, the Federal Housing Administration, USDA loan. Those are typically in the rural areas out in the country, may have some property. Those are a little more difficult to qualify. You're going to need better credit. It's a little more stringent on the income and credit, but it's a great loan because it's zero down if it's in the right area. And there's a tool we have to look it up to see if that home qualifies for that loan. And then the state bond programs that we talked about. And the state bond programs will get you in with as little as zero down. And you can get assistance from 2, 3, or 4% to help you, giving you thousands of dollars to lower that down payment. And then you have the VA loan, which is military loan. You can be current military or a veteran. There's no down payment, no PMI, even though you're not putting the 20% down. Now, they have something called the funding fee instead of PMI. And if you have a disability, 10% or more, that funding fee is waived. Also, it doesn't come in a pocket. It is rolled into the loan amount. Excuse my cough. Now, again, which type of loan is right for you? That's what we're going to talk about. When I look at your credit, when I look at your income, look at where you want to be, we're going to look at the options that you have. There's a wide range of programs and options that we can look at. So interest rate is only one component to getting this new home. So when you're, for example, if you want down payment assistance, that interest rate is going to be higher. But guess what? It's going to give you thousands of dollars, so you don't have to come out of your bank with it. You have that money for emergency, or you have that money for furniture or whatever. So that rate, you know, if it's, let's say it's a point higher, well, it might cost you a little bit more in your monthly payment, but it got you into the home and you're no longer paying rent and you're starting to build wealth for your family. So I'll show you how it really doesn't matter. Between the rate, I'll show you the difference in price, and you won't believe it's really not that much when you start talking about higher rates. Now, when you work with me and work with Ashley, we're going to talk to you about the type of loan. She'll talk to you about the type of home, and we'll figure it out as a team. That's what we want to be. We want to be a full team having this conversation about what program, which home is right for you and your family. And I'll show you several options, and then you and your spouse discuss it and decide which program, which option is the best one for you guys. So let's talk about the process. So there's basically 6 steps to the home buying process. We talked about it a little bit before. Complete the loan application. Provide me with your income and asset documentation. That's your W-2s, your pay stubs, your bank statements. And then once I have that, I'll know your debt ratio. I'll tell you how much you can afford. And then we'll get you a pre-approval letter. I'll send to you and I'll send to Ashley. And then you and Ashley are going to go over the pre-approval and discuss your purchase options. You're going to formulate a plan. She'll send you a list of properties that meet your criteria that you guys have already discussed. You've told her, you know, what type of home you want, what area you want it in. She can pull all of those from the system that she has on the MLS and get all of those to you, and you'll be able to see photos and videos in a lot of cases and see that home virtually before you even drive over to take a look at it. You'll pick the ones you want to see, schedule those out, and you'll start shopping. And that's step 3. You'll start shopping. You want to stay focused, stay in touch with Ashley. You heard about this home. Maybe somebody, word of mouth, something's coming on the market. You want to stay in touch about it. Ask questions. Definitely don't accrue any new debt during this process, okay? After you take that application, do not run up your credit card. Don't apply for new credit. Don't run out and buy furniture. Yeah, oh, but Bruce, it's zero down and there's no payments for 36 months. Well, it doesn't matter. It's going to show up on your credit and it will affect that ratio. So just don't do it. Let's get you in the home first and then worry about all that. Step 4. Now, you're going to talk to Ashley. Let's say you found your home. You guys will talk about it. She's going to look at the comparables. You'll hear them say comps for that area that match that home within a certain radius that sold recently. And that's going to tell you how much that home is probably going to sell for. So you're going to review that with Ashley, and she's going to say, hey, you know what? You need to offer this amount for that home if you want to get it. And this is where the expertise of a realtor comes in. I can't stress it enough. If you do not work with a qualified realtor who understands the market, understands that neighborhood, and understands the process, and knows how to negotiate and deal with the seller's realtor, you are going to miss out on many, many opportunities to purchase a home, because she knows how to talk to that other realtor. She knows what questions to ask. And when she formulates that offer, it is going to be detailed and it's going to meet all of the things that she understands that that buyer is looking for. So if you're offering a little bit over purchase price, if you need to pay for certain things the seller doesn't want to pay for, there are many options in there that you don't even need to worry yourself with. She'll go over that with you, but she's going to tell you, hey, in my opinion, because I've seen the last 6 homes that sold in this area over the last 60 days, it's going to go for this much per square foot, which equals this many $1,000s. So if you want this home, Mr. and Mrs. Buyer, this is my professional opinion. Here's how much you need to offer. And that is critical. And so listen to her, talk about it. And if it's not in your price range, move on. There's another home that'll fit your budget and your price range. So what you're going to do then, she'll prepare that offer that you guys have discussed. You're going to submit the offer with an earnest money deposit, which is typically 1% of that purchase price. Step 5, you will order the appraisal through the lender, okay? You can't order the appraisal on your own. It has to go through the lender. Lots of new laws and regulations around that. And then I'm going to collect updated documentation from you. What I mean by that is maybe you started shopping for the home 3 months ago. And when I pre-qualified you, your pay stubs, your bank statement, everything I got from you back then is now 3 months old. And our underwriters are required to have with the most recent 30 days. So myself or the processor will reach out and go, hey, please update us with your most recent pay stubs and bank statements. And at that point, you're also going to order homeowners insurance. You won't pay for it at that time. You'll just get a quote. You can call whoever you have your auto insurance with, or I can help you. We can both help you with a qualified agent to get you a quote. The quote goes into your file because we have to count that. Remember, that monthly payment gets counted into your debt ratio. And then the processor goes over all the documents that you've resubmitted to us. We have everything we need. The processor reviews it all. And then once she checks all the boxes, it goes to our underwriter. Okay. And once it goes into the underwriter reviews it. She checks all the boxes, verifies everything that we said is true. And then she gives it the final loan approval. So congratulations, final underwriting approval. You can now close. We're going to prepare your closing documents to send to you to review. And then once you sign that closing disclosure, you can then close as early as 3 days. So you have 3 days after you sign that closing disclosure before you attend the closing. The title company will reach out. They will schedule it with you. You go into the title company, sign your documents, and get the keys to your new home. Now, I hope you took away something valuable. All right.
About 54 seconds left. Just wanted to keep you on board with our commitment. Hey, listen, we're here to provide value and to make sure that everybody's getting the information that they need, but understand that you're taking time out of your life. So we want to hang tight on our timeline. You're getting close to our timeline. So just letting you know, just being your best.
I am. Thank you for that. Appreciate it. She is, man. She keeps me on point. So if you just tuned in, if you didn't see all of this, I want to remind you, you can pause, rewind, go back and check it out. But we basically here to recap, we've gone over why owning is better than renting. You know that. We talked about the pre-approval process and what that takes. We talked about the credit report and what factors count and weigh into that credit score. We talked about your down payment options from 3%, 3.5%, 20% to down payment assistance. We talked about the closing costs. Don't forget that in addition to that down payment, you also have closing costs for your title fees, the lender fees. You've got government fees and also your escrow for taxes and insurance. We talked about the different loan programs available, FHA, conventional, VA, USDA, and we talked about what makes up your mortgage payment, your principal, interest, taxes, and your hazard insurance. And then we talked about those 6 steps in the home buying process. Now, Ashley, I don't know if we have any questions that have come in. If we don't, just want to remind you guys that right here you can see our QR code. That is a great way to connect with us. Also, if you'll see scrolling here, this is my Calendly link. And then here comes Ashley's Calendly link. Famous in Texas. I love it.
That's right.
You can find Famous in Texas.
Yeah, that's just, who can't remember Famous in Texas, right? I just did that for SEO purposes. Listen, Bruce, I did have a question come in.
Great. Okay.
I did have a question come in. Great, by the way. Sam, thank you so much for sending this question. Is how important is it for a lender and a realtor working side by side with one another? And that is an excellent question because in actuality, listen, in the market that we're always in, no matter what market we're in, relationship with the borrower, which would be Bruce, and I'm the realtor to be showing you and helping you to find the property that you're ultimately wanting to make it on. It is imperative that we have a very close relationship and that we're communicating on a level of really and truly. Look, I know Bruce doesn't operate like Bruce and Ashley as we look like we represent what we win. End of story, right?
Right.
Bruce, I mean, we
That's
win.
Right. She's going to win the deal. And listen, I want to piggyback on what you're saying, because right now it's more important than ever that we have that constant contact. And listen, it's as easy as picking up the phone, texting, hey, Ashley, here's the deal. Or she can go, Bruce, hey, what's going on with this borrower? Or we found another home. It's 10,000 more. Can the borrower still qualify at 10,000 more? Boom, I'm right in the loan. I let her know. But here's why it's so critical. Let's say that I qualified you, the borrower, about 45 days ago, 2 months ago, and she's got that pre-approval letter. You guys are out shopping on the weekend. Rates went up, okay? On Friday, now it's Saturday, rates went up at the end of the day on Friday. Hopefully that doesn't happen, but if it does, do you still qualify? What if the rate went up and you were marginal? You were going to qualify at that payment at this certain amount, and now the rate changed, your payment just went up monthly and your ratio went up. Now what happens? Boom, we're giving somebody a pre-approval letter, and we need to make sure that you are still approved. So it's critical. It really is important that, and that's what we can do. She's going to be out there showing you that home, and she's going to go, hey Bruce, I just want to make sure we found this other home. It's 25 more. And I'm typically I'm going to get you approved for the maximum value. So she'll know that before you guys ever get out there. But just in case, she's going to check back with me as you guys are out. And what happens often, and I have this really cool mobile app right here that you can have your pre-approval letter in that mobile app. And let's say you find a home down the street, and maybe it wasn't listed or it just came on the market, and you go, whoa, this is a perfect home. We want this one. So now you need a pre-approval letter. You need to update it. Guess what? I can update it right there in that mobile app. You text me, go, hey, can you update this purchase price to this address? And within 2 minutes, I can have you that pre-approval letter. And that is so important when you're out there in today's market shopping for a new home. Anything we missed?
Absolutely. I got one more question, Bruce. So Diane asked, hey, I'm worried about being a part of a homeowner and owning my own home, but I am away from doing that. Diane, great question. I mean, seriously, great question. Here's what I advise all of my clients who call in, just like, this is not a weird question, by the way. In actuality, Bruce and I agree, Bruce, that we're in the game plan business. Like, we create game plans. Most of our call us about 6 months to a year out. And what we do is we talk about, I got an apartment, I'm in a lease, it's not expiring until March. Great. Cool. Let's set you up on a goal to have 20% down, 5% down. Let's talk about finances. Let's talk about cutting some, monthly. Hey, listen, I misspoke. Let me retract. About looking at your bank statement. And here's the thing, I can save tons of money and I know Bruce can too. Like, Bruce was looking at it and he's like, you can Netflix and Starbucks and Drizzly and Uber Eats, that, like, there's tons of money that are involved in those monthly subscriptions. Listen, we can help you kind of like itemize the situation and look at it from and go, holy cow, we're like dropping money left and right on these services. Yes, provide convenience. Absolutely. Who wouldn't love to do that? But when we're trying to let some stuff in, especially with the economy that we're walking into next, we prime you almost $500 to $2,000 of just monthly paying that in actuality are unnecessary. Look,
Yeah, I agree
love
with that.
convenience too. I love convenience too. Here's the problem. I think you know this about me. I'm probably the most frugal person you'll. But you know what? There's a benefit in that because I've been frugal for almost 20. I promise you that where I'm sitting at now is a result of my time over time over time over time.
Yep, absolutely. And just again to tag on to what you're talking about, when I see that credit report, I see it all. Okay. And a lot of times oftentimes there might be a debt on there that a collection that you're not even aware of. It hasn't shown up anywhere you're saying, and you don't know it's costing you 40 points a month. And guess what? It's an old medical debt. By the way, medical debts are going to be going away in September, and we'll talk about that. But let's say it is an old medical debt, or it's an old cable, something that you didn't know you owed, and it's $200, but it's costing you 40 points on your credit score. Well, guess what? I'm going to show you how to pay that, and you'll get a deletion letter. You're going to have them agree to give you a deletion letter if you pay it. Once you pay that, they give you a deletion letter, and within 4 or 5 days, I have you a new credit score. We don't have to wait for it to cycle 30 days, 60 days, but there are many, many ways, once I see your credit report, to get that score up without hiring someone. It's great to hire a credit repair specialist in a lot of circumstances, but in some of these simple situations, we can help you right up front. And the other thing I was going to say, tagging on to that, is cars. A lot of times you've got a car. What if you've got a car on there and let's say you co-signed with someone, all right, which I don't recommend. Don't ever do that. But if you have to help someone and you have co-signed, if that other person pays that bill, they pay that payment, we just have to get the statement showing that they make the payment, and we can remove that from your debt. So there are a lot of little things like that that we can do to help you, but I need to see it. I've got to see the full picture, the full report, and there's just little ways that we can make some subtle changes here and there to help you get where you need. And we're talking, listen, I'm talking to people right now. We're in June, so I'm talking to people about early next year. I'm looking at their situation with their taxes and tax returns, and especially if you're self-employed, like realtors, and a lot of us have been self-employed in the past, you write everything off, right? Because you want to pay the least amount of taxes possible. So what I'm telling a lot of my borrowers for early next year is before you file those taxes, have your CPA go ahead and get them worked up for you. But I want to look at it before you file it, because I want to tell you, here's how much money you need to make. Do not write this off. Do not write this off, because you need to make this money. Oh, but Bruce, I'm going to have to pay taxes on that. Yeah, you're going to pay taxes on it, but you're also going to be in a house next year. And then guess what? You'll be able to write off the interest on the home. And next year, you can start writing those things off again. You're already in home. But you have to kind of own up to it, make that tax payment, and then we get you qualified. I want to see that before you file that next tax return to make sure that you are where you need to be. And there's a lot of caveats in that. I won't bore you with all that now, but that's why you need to talk to the experts so we can guide you. You've been renting for years and watching other people build their wealth, starting with the starter home, and now they're in this big, nice home, and you're like, man, I'm still sitting over here in my apartment, in my townhome. And there's nothing wrong with it. Some people want to do that forever. And if that's you, that's great. I don't think it's you, because you wouldn't be watching this, right? So you're here because you want to purchase a home. We want to help you. We want to answer your questions. Ashley, anything else?
I had one more question come in. One more. And we're
Okay.
going to wrap it up on. Jordan just wrote and said, I have been renting name homeowner for 13 years, $1,750 a month. My heart is broken. But she just let me know that she is determined to take the next steps. She's fearful. She's afraid of getting court pulled, this, that, and the other. Listen, at the end of the day, Jordan, you be fearful of that. What you're doing with us is we're going to set you up on a game plan. We're not going to hurt you. So I guess where I'm going, Mr. Mender, like, explain to her that we can set her up on a game plan. We're going to punish her, but it's going to give her the means to make the best decision for her and her family, especially paying rent for 13 years, where in actuality, you and I both know that she probably paid for the house that she's living in now, right?
Probably, or at least if you've been paying that, you would have untold thousands of dollars, whatever that home is worth. Probably 75% of the value of that home would be your money now. So that's why it's so important to purchase rather than rent. But a good point about the credit. People are often so freaked out about having their credit pulled. Is it a hard pull? With a lender, yes, it is a hard pull. Typically, that is only going to impact your score anywhere from 3 to 8 points. Okay, so if you're not sitting on the bubble of getting approved, like 600 is an approved number, and you're right at 602, don't worry about it. But even if you are, 99% of the time, I'm going to show you a simple way inside your credit report to improve your score. Sometimes it's as easy as going, oh, look, you have that Kohl's charge card right there. You've got $1,000 spending limit on that card. And guess what? You owe $900. Well, pay that down. Pay that down to 30%. Try to keep all your credit cards and your debt at 30%. Don't pay it down to zero. Don't close the account out. Keep it about 30%. The credit bureaus love that. So here's a really awesome thing about that. I mentioned $1,000. Let's say it's a $500 card. You owe $450 on it, $499. Well, guess what? Pay that down to 30%. So you're only spending $300-$400, right, to get that down. And the beautiful thing is the credit bureaus, they don't care if it's a $10,000 card and you owe $9,500, or if it's a $1,000 card that you owe $950. It's all about the ratio. So what's easier to pay down? We're going to look at your small ones first, the ones that you have almost maxed out, but it's a small spending limit, okay? A line of credit's only $500, $800, $1,000. We're going to pay those down first because that's going to improve your ratio quickly. It's going to make your scores go up. So Don't be worried about having your credit pulled. There's far more advantages to getting your credit pulled and getting the process started. Your credit is good with us for 90 days. So if we start the process, we're not pulling it again. Is there a hard pull during that time? No, there's a soft pull at the end that does not impact your score. And the only reason they do it at the end is to make sure you've not acquired new debt while we were buying the home. Okay, that's why it's important. You don't get any new credit. You don't buy a new car or an airplane or a boat. Don't spend any money until you close on your house. You would not believe the number of people who go buy a new car or go lease a car while they're buying their home. Don't do it. Don't do anything until that home is purchased. I hope that answers the question.
Hey, listen, we've got a lot of people that are out there commenting. Matt Francis, listen for the comments. Reach out to us. We are happy to have a one-on-one with you. If exciting, if you're hearing it's exciting, it is.
Drummer? We talking about drummer Matt? Drummer Matt Francis? Hey, Matt.
Yeah.
Awesome.
Listen, Matt
Matt's a great guy.
is hanging out. Sammy's already responding. We've got responding. Listen, you guys, like, here's the thing. We know we're encroaching upon. Thank you so much for like taking the time. Listen, we get probably already, only happened to capture like maybe 10-15 minutes of it, but only hope that we're providing value. We're here to help you. We're not in this to do anything else. Help others to figure out a way to capitalize on leaving a family, and the only way to do that is through home ownership. Trust me. And I know Bruce will yeah, right. Matt just said LOL, yes, drives. So Matt, like, listen, I don't know if you're driving or whatever you're doing. Jordan, if you're driving, Sammy, I'm not sure what you're doing. I mean, we've got a lot of callers on tonight. I hope that there's a way for you to connect with us. We do have, a couple of QR codes. I think that when we get, so here's the thing. Here's what we've noticed. Like, we know you're driving. We know you've got things to do, soccer practice. Look, we're giving you an opportunity right now. Just snap a picture of it, and probably you'll be able to come back to it. And we're in the world that you're in. So most likely you'll take a picture of it tonight and not even think about us until Friday, maybe Saturday morning. But you're going to be like, oh yeah, it's in my pictures. I'm going to holler at you. Look, we get it. We're too. In fact, wouldn't you agree? The world's just going so crazy. At the end of the day, look, we're always here. We do this call every other Tuesday that we're going to be presenting by our webinar. Obviously 2 Tuesdays from now, but here to take the call. Bruce and I work more than we should, more than 40 hours a week. This is our bread and butter, day in, day out, to help you. We understand the process of being to our clients and helping everyone make the best decision and for their family legacy. And trust me, it excites both of us. It excites both of us to be able to set you up for success, because once you go into home, it's just a process of appreciation and down the road, and hopefully in your home for 5 to 7 years and maybe even longer. But the good thing is, at the end of the day, you're really borrowing money from yourself. Even the money from Bruce, you've got to look at it from a perspective is you're borrowing money from yourself back, and in turn you're getting that appreciation back. And when you go to sell something beautiful called equity, which is the money that you owed less than to sell it for, and you can take that money and take it into a new home, a big home, a home that fits current needs as the years go by. What Bruce and I are so passionate about. So thanks, everybody. I went way too long, Bruce.
That's great. That's what we're talking about, building wealth. Start with your starter home, get your next home, Most of those people you see in those big, fabulous homes, they didn't start there. You can talk to them about that. I guarantee you they didn't start there, but they did start. They got their credit pulled. We did everything we needed to do to get them in that first home, and we want to help you guys get there. Thanks again for watching. Again, you can see how to get in touch with us right here. And you can find us online, and we're all over the place. I've got my YouTube channel, Bruce Cline Mortgage, and you can find Ashley at dfwfriscohomes.com. You can find me at bruceklinemortgage.com. Facebook, TikTok, all of it. Have fun, everybody. Thanks again. Thanks, Ashley.
Have a great night.
We'll see you next time.
Thank you for joining us. We appreciate you.
Bye-bye.